Hi, and thanks for joining us for another great video here at Street Smart Options. I'm Jim Bunker, and as with me always is Jonathan Sherman. Today we're going to be talking about options trading technical analysis. So, folks, if you're not subscribed to our YouTube channel, give us some thought on hitting that subscription button and hitting that bell icon so that we can get you other great videos like this. And you're not missing out on content that could be very timely to help you in your business. With that being said, Jonathan, go ahead.
Yeah, so I wanted to talk about options trading technical analysis. And to me, that means looking at a stock chart, the underlying, and figuring out if there's an opportunity to trade that stock using stock options. And the place to start with any kind of trade is to look at the overall market environment. Are you in an uptrending, downtrending, a volatile market environment, a sideways environment? And then from there, go to figure out, what kind of trade you should be looking for and what kind of underlying stock. So right now, this is right now June 13th, 2019, and the market's closed right now. It's actually in the early evening. And the S&P has been in a bull market for a really, really long time, since 2009. And it has had some corrections, and it had a relatively steep correction, short-lived. Here, you're looking at the S chart of the S&P 500 in the end of December, where it sold off, and then has rallied subsequently and recently corrected some from this rally. Now, there's been trade concerns overhanging the market, and that's one of the reasons for the sell-off we had in the end of 2018. And then you can blame trade concerns again for this recent sell-off in May, June. But regardless of that, the thing to do is, what kind of market are you in right this instant? And it turns out right now we use some proprietary timing indicators that our members have access to. And right now we're actually in a rally phase in the market. So the risk is lower for entering a trade alongside trade that benefits from the market going up. So right now we are looking at the S&P on a weekly chart, and you can see that over the last, and today is Thursday, so over the last 2 weeks, the market has gone up some off this bottom. And actually, like I said, from the timing indicator, it's actually a good time to get involved and go long. Now, no timing indicator is perfect, but if you use a timing indicator that is a good indicator over and over again, then your risks are reduced and your gains are increased, right? You're not going to be perfect 100% of the time, but you're looking to increase probability of long-term success, right? So given that the S&P is rising, I'm going to go look for a momentum stock, a stock that is going to outperform the S&P on the way up. And so the stock that I found is called Zscaler. And Zscaler is an IPO in 2018. And they're a company that provides a cloud-based security system for enterprises. And we can look a little bit later on into Yahoo and see what they do. But the thing that's interesting about the chart is that, of course, this thing has been in a steep rally mode. It went IPO under $17 way back in March of 2018, and it had this first level base here, and then it had a second level base, and it undercut this base. And if anybody's a proponent or follows William O'Neill, you'll know that when it undercuts a base, you can kind of reset the base count, right? And so what we look for is something that has had less than 2 bases. And so this stock this is the primary base in this chart here, and it rallied out of this primary base into 2019, and then it started basing again, right? And it didn't go anywhere off this first rally, and the market went into a correction mode, right? And so the stock fell off with the correction. But then subsequently, now the market's rallying again, and it's a good time to get in. It's coming off strongly on decent volume on the chart off of this 10-week moving average here, right? It found support at the 10-week moving average, which is what you'd expect for a company that has institutional investors supporting the stock. And if you look at the price volume action in this, typically this stock will rally on strong volume, and and then sell off on weak volume. And if you look at this chart there, you can see here for sure, a lot of weak red bars, right? And if you look at this chart, it's mostly green, right? Because the stock's been going up and up and up. So there's really very few red bars. So there's been a lot of accumulation in the stock. And it turns out from a fundamental standpoint, now we'll get back to technical analysis in a minute, but I like to mix a little bit of fundamentals in with this so I'm confident in the stock I'm picking. We look at finance.yahoo.com and we can look at the profile of the stock and maybe, just read about exactly what they do. They operate as a cloud security company worldwide, and they're in all these different industries, airlines, conglomerates, consumer goods, healthcare, government, et cetera, right? And it's a software as a service application, so it's a very sticky business. These companies, once they get on board, aren't going to leave anytime soon. So it's a subscription business. It's very sticky. So they have a good business model. And so as long as their product is good, these companies will stick with them. So, okay, so we know that. It's a good business model. It's in an area that has seen a lot of growth companies emerge in this cloud security area. And so what are they doing in terms of like financials, right? So we'll get back to the technicals in a minute. But so financials, we see that this company has had strong revenue growth since 2015. And this is the annuals. But they haven't been making any money, right? Operating losses all through there. And so remember, they went public in 2018. So we'd hope that they start seeing some earnings and something in the way of earnings in 2019. So this is quarterly now. And you notice that the operating income or loss is still negative. However, a lot of these software as a service companies have non-cash expenses that hit the bottom line there. So we should look at the cash flow. And if you look at the cash flow, you can see that the company on an annual basis, let's look at annual first, on an annual basis, turned the corner on operating cash flow in 2018, and then we look at the quarterly, and we can see their cash flow positive all 4 quarters from an operating basis. So the company, you should always value companies based on cash flow in the long term more than the earnings growth, so to say, the kind of the regulatory earnings growth. This is more representative of what's actually going on with the company. So that being said, we can look now, we're happy with the growth and we're happy with the fundamentals. And we can even go one step further and look and see what's happening in terms of surprises on the earnings front. And we can see that the earnings have been surprising big to the upside. You can see 80% surprise, 120% surprise, 1,000% surprise in January 30th earnings report, and then a 400% surprise. And with all these surprises, you'd expect earnings estimates to be going up, and that's what you see. If you scroll down here, you can see that earnings estimates for the current year are up from 12 cents to most recently up to 17 cents. So anyway, all that said, going back to technical analysis on this chart, we can see that there's this accumulation with the green and red bars. And now how should we trade this thing? Well, let's go and look at Interactive Brokers and look at the options chain for this stock. So that's where we're going to go next. And we can pull up I have Zscaler pulled up already in the window here, and I can look at the options chain. And I already pulled up the August 16 option chain. That's about 2 months out. And the reason I'm looking 2 months out is because what interests me for this stock is a deep in the money call option. And we tend to trade these things in 3 to 12 week cycles, right? So this is 8 weeks out. And so that fits into our time horizon. Now we can go even longer dated, but we're going to probably paying up a little bit more for the time value in the stock, right? So which isn't necessarily a bad thing. We can go November if we wanted to. So if we were looking at the November 50s, mind you, this is trading 79.5 right now. If we look at the November 50s, this is trading the intrinsic value is 79.50 minus 50 on the call side. So it's $29.50, right? So we're paying about $2 for the time value if we were to actually, buy the November 15 deep in the money call option. Maybe that's the one to do, is the November 15. And if we do that, what we're doing is we're leveraging. It's basically a leverage position, right? Because you're putting less capital in. You can control 100 shares now with $3,220, and that's the ask, right? $3,220. You can own this call option, 50 strike, and you have then basically cut the amount of capital expense you've had to put in. Because if you were to buy this outright, 100 shares cost you $7,950, right? Now, mind you, because it's kind of leveraged, right? Because you're saying this, if this thing goes down suddenly to $50 a share, then you're out nearly 100% of your investment. The intrinsic value goes to zero. You still have some time value left, but the intrinsic value goes to zero. So your leverage is more risk in a leveraged position. So you got to make sure you pay attention to the stock price every day to make sure the thing is behaving like you want. And that's one of the reasons I go into the fundamentals and all this, is because, have some confidence in the company and not just the stock chart, so that you can say to yourself, I can live through these little jiggles. And, if I can have a stop loss on this deep in the money call option of maybe 15% and be comfortable with that, right? Now, if I own the stock outright, I want my stop loss to be more closer to like 8%. But mind you, this is a leverage position. So we're 10 to 15% is probably where we're at. So that is basically, when I say technical analysis of stock and when in options trading, I first go to the charts and decide what is the chart, what is the stock I'm going to get involved in. And we can look at the daily chart a little bit here. That was the weekly chart. And I base most of my trades off the weekly chart. But you can see also on the daily chart, even this last trading day here, today again is the 13th, we had an increase in volume as this stock is challenging its highs. And that's a good sign, right? That the stock was up 255 today on an increase in volume. So it kind of gives you a little bit more confidence that this thing may actually break out here and move substantially, maybe 20% or more. And then, 20% on this is going to take you up to what? Up to almost $100 a share, a little less. And but on a $50 deep in the money call option, that move of 20% is going to be more like on the order of 35%. So you can, once again, so it's a leveraged move, and so you can, make more money. So that's what I have to say today about options trading technical analysis.
All right, Jonathan, thanks for that. And folks, if you're not a member of our group over on Facebook, you're possibly missing out on good information like this, just simply because we give a bunch of free information out on that group. To find that group, all you need to do is put in the letters SSO in your browser on Facebook and search for the Street Smart Options group. And if you're liking all of this free information that you're getting through us, you might want to consider joining our group over at our website, which is streetsmartoptions.com, where you can learn the entire process of how we trade and what we teach there. Thanks, and have a great day.